Welcome to Resilience and Resolve with Lance Drury.
Hello and welcome to today's episode of Resilience and Resolve with Lance Drury, where we break down the complexities of the tax world, making it easier for you to navigate through the numbers and paperwork. I am your host, Kevin Rosenquist, and I am here with Mr. Lance Drury. Thanks, Lance, for being here. It's great to see you again.
Well, thanks for having me. I always enjoy it.
Well, so today we're going to talk about the most common tax problems and how to solve them. So can you explain to the listeners once more what your background in tax resolution is?
I've been doing this for almost 20 years now, and I started out primarily as a practitioner. I've probably handled thousands of cases, but now I have 4 offices and soon to be 14 employees. And so basically I sit down with my employees because we have 1,000 clients or more at any one time, and I monitor those cases. And then I do all the initial consultations, and we may do 5 or 6 initial consultations every day, including on the weekends, although we don't generally do more than 2 or 3 on a Saturday or Sunday. But I now primarily just run the business. But, you know, in the old days, I would sit down with the clients, I would get all the information, I would review all the information during the history of the IRS and go through all that. And then I would get financial statements from the client, and I would give them advice on how to adjust their assets or their expenses so they could get the best possible deal out of Uncle Sam. For example, if they're living with their parent and they're not paying any rent, I would tell them to get a formal lease agreement that shows they have a legal obligation for rent. And that way we could get that as an allowable expense because they'd much rather pay their parents for rent than pay the IRS that amount.
Sure.
And so if they're paying the parents $800 a month, that's $800 a month less they have to pay on their tax liability. So that's the sort of thing that we do is we strategize and advise them on the best way to get the best results. We help them so that the IRS doesn't seize their assets or their income, and we make sure that they're compliant moving forward. And mostly that's with businesses, with sole proprietors, self-employed individuals. We make sure they're making estimated tax payments so that when the tax season comes and the taxes are due, they've already sent in the money, and they can then save monies also on the back taxes. So it ensures that they're compliant moving forward, as well as lowering what they're going to pay on their tax liability.
I know there's tons and tons of different situations and problems that can happen with taxes, but what are some of the most common tax problems that you feel that individual and businesses are facing today?
Well, they're upping the audits. You are seeing a lot more businesses being audited. There's going to continue to be more businesses, self-employed people, even personal tax returns audited. The IRS has committed a lot of resources to that. At the state level in the state of Missouri, a lot of the audits are directed towards restaurants and convenience stores because they're convinced that every restaurant and every convenience store is hiding money, is hiding cash. And so you see that, and you want to protect your client from those audits. You don't want them to do that on their own, because I've seen audits go criminal because of what the taxpayer told the auditor. So they certainly don't want that to happen.
Right.
And so the biggest thing is just getting their tax debt resolved. If they're being levied, to get the levy lifted, which you can do if you can show that it's a financial hardship for that levy to be in place. And if they're taking 90% of your take-home pay and wiping out your bank account, that's generally pretty easy to show financial hardship there.
Absolutely. You mentioned the thing about the restaurants and convenience stores, but why the sudden increase in auditing across the board?
Well, the increase in auditing is primarily at the federal level, the IRS. And I think they're just trying to find a way to generate more money. And so one of the ways they can do that is by doing more audits. When the tax return is sent in, there are certain red flags that will show up. For example, they might have missing income that was reported to the IRS, but the taxpayer didn't report it on their tax return. Or they have expenses and they see an extraordinarily high number for that. And so that's a red flag. And then they're going to want, okay, give us the documentation to prove that this is what the expense actually was.
We have a lot of different things that we talk about, a lot of different terms that we talk about on this show. So can you explain the difference between issues like tax debt, tax liens, and tax audits?
Okay, tax debt is when you actually owe taxes to a government entity, whether that's the Internal Revenue Service, whether that's to the states. Generally, it's their departments of revenue or any other taxing authority. A tax lien is when it's not a seizure, it's not like a levy. A tax lien is when the IRS files a notice of federal tax lien with the recorder of deeds in the county in which you live. And the reason for that is to perfect their interest so somebody that comes behind them doesn't take priority because they didn't file the lien. But it's not a seizure and it doesn't last forever. And so the IRS then, if you sell your home, that lien has to be satisfied at the time of sale. A tax audit is when somebody comes in and determines whether or not your tax return was correct. And if you have not filed a return, to see what the actual tax liability should have been, they're actually filing the tax return for you. So those are certainly three different animals from three different distinct areas of tax representation.
A lot to digest when you talk about tax law, for sure.
That's right.
What options are available for resolving tax debt? Such as installment agreements or offers and compromise, or what kind of resources or what kind of options do people have?
Okay, well, you've named two of them, which is the offer and compromise, but a lot of people don't qualify for that because they have too much equity in their homes. We're particularly finding that in Nashville because homes have just skyrocketed in value in Nashville. So people have all this equity in home, which knocks them out of the offer because the equity in the home is higher than what the debt is to the IRS.
Yeah.
There's installment agreements, but there's different types of installment agreements. There's a streamlined installment agreement whereby you pay back the full amount, but you get the luxury of time. It's 6 years. You also can seek penalty abatement. And there's also an animal called, and we do a lot of these, a partial pay installment agreement. So it works like an offer in compromise in that you never pay back the full amount, but it works like an installment agreement in that you're paying that amount back over time. And the big thing there is your equity and assets is not always seriously considered. For example, if it's your home and you have a lot of equity and you get a loan denial letter saying you can't borrow to pay off the debt, they're going to leave the home alone and they're not going to consider that in determining your ability to pay. It's primarily going to be the difference between your monthly income and your monthly expenses. And then the other two options are currently non-collectible or just paying the full amount back right away. And currently non-collectible is whereby you prove to the IRS that you don't have any money left over at the end of the month, and therefore they should place you into what's called C&C status, currently non-collectible status, due to the fact that you are unable to pay any amounts back because you have a financial hardship.
And if you get to that point, then does it wipe the debt?
Over time.
Okay.
It doesn't work like an offer. So, for example, if you have 4 years left on the collection statute, you have to run out the clock. But for every day you're in currently non-collectible status, that's one less day the IRS has to collect the debt. And so if they bring you out, say 6 months before, they're not going to collect a whole lot of money in 6 months' time because they have to go through the hoops to collect, and that takes time.
Okay. What are some common mistakes people make when filing their tax returns that could lead to problems like this?
The biggest problem is that they don't get a 1099 from their financial institution or whoever they were employed by, and then they forget or they don't think they have to report that, but they do. It's not a defense that they didn't get the 1099. It's still income towards you. And so I'm surprised sometimes that they should give their accountant the power of attorney to prepare the return because the accountant can then go in and pull their wage and income transcripts and then get all their reported income so that mistake isn't made on the tax return. So that's one of the areas. The other is they fudge their business expenses thinking they're going to get by with it. And then sometimes they get audited because of that. So that's the two biggest things. And the other one is they probably shouldn't do that on their own. They think they're going to save a little money by doing it on their own, and it can create major problems, and they end up spending more money than they would have if they had done it on their own.
Yeah. What are the things that people will try to claim as expenses? Like, I'm sure you've seen some wacky stuff.
Well, a lot of it like car and truck expenses,
Sure.
mileage. Like I had one in the state of Missouri once where she was claiming all these employee expenses, and she did not even report those employees to the Division of Employment Security. She was paying them in cash, didn't even know their last names. And of course, she couldn't do that.
Right.
And so she couldn't get those deductions, those expenses, and she couldn't understand, I got her into currently non-collectible status, but she said, I can't pay them a check and have taxes taken out. I think it was a tree service, because she said, they'll just go to my competition because nobody pays wages in this industry. They all pay cash.
Mm-hmm.
And so that's the other problem, that because to be competitive, they pay in cash and they don't keep track of their employees' full names. And so it's not reported anywhere. And then they can't take, the wages as an expense.
How do penalties and interest accumulate on unpaid taxes, and what can be done to minimize or even eliminate these charges?
Okay, well, you can't eliminate the interest. It's statutory. It's tied to the prime rate, so it varies from year to year.
Okay.
The penalties for failure to pay is generally 1/2 of 1%, but once you're in agreement, it's 1/4 of 1%. So it's cut in half. But people think you can get the penalties kicked. Well, you can get penalty abatement kicked for failure to pay once. It's a one time if you had a good history of compliance prior. But again, the IRS considers it they're loaning money to you. So they're going to continue to charge you penalties and interest until the debt is paid in full. You can get the failure to file kicked. That's generally 25% of the raw tax. And then sometimes when people fail to report income or they don't have all their expenses, they'll get an accuracy related penalty for understating their income, overstating their expenses. And generally, there is another way to get it, but the easiest way is to go to U.S. tax court, because if you're back in the collection system, they cannot abate that accuracy-related penalty. But you can go to U.S. tax court. First, it goes to IRS appeals. Then it goes to the U.S. Attorney's Office. You can generally get those abated there. And I know it's not hard to believe, but the lawyers are generally more reasonable than IRS appeals. So we generally get 2 bites at the apple, and then we get our satisfaction from the taxing authorities.
Okay, gotcha. Are there programs or options available to reduce or abate penalties for individuals or businesses?
Well, there is for penalty abatement. In addition to first-time penalty abatement, you have to show reasonable cause. Okay. And, I just had a guy that sent it in. He said, well, I had a delay in filing my taxes. Well, that's not reasonable cause.
Right.
And so you have to have a good reason if you're going to go in and try to get those penalties abated for reasonable cause.
What have you seen that has been successful? What kind of reasons have been successful?
I had a woman once, and we got all kinds of penalties abated because her husband was a lawyer. She was just a homemaker. He took care of all the finances. After he died, he got a big personal injury settlement, which was hers. But of course, she had never taken care of the finances. She didn't know what to do. Mm-hmm. So we probably got $50,000, $60,000 worth of penalties kicked because of her lack of knowledge about the financial situation, because she was a stay-at-home wife and he handled all of the problems associated with the finances.
Okay. All right. That's interesting. I wouldn't have expected that. I don't want to say to work. It makes it sound sinister, but I'm surprised that that's allowed, only because a lot of times I feel like you're expected to know these certain things. But
well, I'll give you a similar one. There's another remedy called innocent spouse, and we had a client who was married to this business owner, and he hid everything from her. In fact, he even signed the returns for her. She knew none of this was going on. She filed for divorce. It was probably well over $100,000. We submitted all this, and it helped that in the court pleadings for her divorce, her attorney had listed all this as marital misconduct. So we sent the pleadings for the divorce action into the IRS, and she was granted full relief for the innocent spouse defense.
Okay. Innocent spouse. Interesting. At what point does it make sense to hire a tax resolution attorney to aid in tax resolution needs? When do you get to a point where you're like, I need to talk to someone who knows what they're doing?
Well, I think I brought this up probably during the last show that we were a part of. And that's if you owe more than $10,000, if you have a revenue officer, if there's a levy in place, or there's a threat of a levy, if you have unfiled tax returns, or if you are being audited. In all those situations, you need the services of a professional. And, people think they can do this on their own. And I tell them, I said, well, what do you do for a living? Well, I build houses. I said, you know what? You trying to deal with the IRS is like me trying to build a house. It's not going to work very well. You really do need somebody who has the expertise to do this. And I have to tell you, when I was a regular small town lawyer, I had 15 hours of continuing legal education. Now all my lawyers, we all spend 50 to 100 hours or more each year just keeping up on this. So people think they can do it on their own, but they really can't for the most part.
And if somebody is listening and they're currently facing a tax problem and they don't really know where to start, what advice would you give to them right now?
I would tell them to go to my website to see all the resources that are available to help them with their problems, to see the testimonials, to see what my firm can do for them, how we've helped people in the past. And I would tell them that if they don't hire me, there's 3 rules. You hire an attorney who does this every single day. Accountants are great with the numbers, but I've seen accountants give atrocious advice to their clients because they just dabble in IRS tax resolution work.
Right.
Secondly, go local. And third, don't hire one of the big boys. There's a lot of scam artists out there, and they just take your money and they don't do the work. And for example, I'm going to just give you a small example. People come to me, they're either my existing client or a prospective client, and they get these notices. And the notices do not have a physical address on there. There's an 888 number, and it looks like this document is from the IRS saying we can settle for 10 cents on the dollar. And they're just scam artists. They're just trying to get their money. Or they'll call people and they'll say, if you don't pay me $3,000 today, I'm from the IRS. We're going to come out and arrest you. It doesn't work like that.
Right.
In fact, I had a guy several years ago come into my office, said, I sent this group $3,000 yesterday. Now they want another $3,000. I said, give me the number. It's a scam. So I called him up. As soon as I identified myself as an attorney, they hung up on me.
Of course.
Yeah. So, you've got to watch who you hire. You've got to get somebody with a great reputation. So you need to do your due diligence when you're looking for a tax professional to represent you.
Good advice again. Well, thanks for tuning in to Resilience and Resolve with Lance Drury. That website Lance mentioned is lancedrurylaw.com. Don't forget to like and subscribe to stay up on all things tax law. Lance, always great to see you. Thanks for being here.
Great to see you. You have a great day.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.